US banks have had a real stranglehold on US dollars, and it gets driven very much by risk appetite. Banks that do all the clearing are kind of strangling economies, really. So, the answer could be stablecoin.
Hello, everyone, and welcome to the Future of Finance is Open podcast. I'm Ian Horn, author of Why DeFi Matters, and I'm joined by Aaron J. Katakam, author of The Future of Finance is Open, which, of course, is the name of this podcast. Aaron J., good to see you again. Let's jump in. We've got Chris Mason on the show today. I'm not going to do a big reveal. We'll probably say his name in the title of this episode anyway. But quickly, for everyone listening, Aaron J., can you tell us why you've invited Chris and why he's kind of an important part of the story you're talking about with the future of finance?
Yeah, thanks, Ian. I mean, I'm fascinated with Orbital, and Chris has been bootstrapping it for about 8 years now. So I'm really keen to dig into some of the challenges, some of his hopes, and as we continue to move towards this open world, and with stable coins, and CBDCs and tokenized deposits and all of this, Orbital is going to play a pivotal role in bringing that all together. So it's going to be a fascinating conversation.
That's a great setup. Chris, let's bring you in. How are you doing?
Good. Yeah. Thanks for having me on the show. Yeah. Delighted to be here.
I mean, you don't sound it, but I'm delighted to have you with us. There we go. There we go.
Probably lack of sleep last night, actually. I was up thinking about, and I wasn't thinking about this podcast, to be honest. But anyway, yeah.
Well, you should have been.
I was working late. I should have been. Yeah, exactly. Well, we'll see. We'll see how the podcast goes, whether I should have been or not. But yes, probably.
It's all good. I love that. I love that optimism to start the podcast. We'll see how it goes. Could be terrible. I don't know. But Chris, it's great to have you here. Genuinely, it is. When you think of Aaron J's book, The Future of Finance is Open, what does that phrase inspire to you? What does that make you think?
I think, obviously, the world's going through a huge transition. I think domestic payments is all sorted, isn't it? When you go market by market, all right, there may not necessarily be that interoperability. Can you use your Visa card all over the world, or can you use Alipay all over the world, that type of thing. But I think domestically payments are sorted. I think, the big conundrum is, how can we improve cross-border payments? And I think, the previously US banks have had a real stranglehold on US dollars, and it gets driven very much by risk appetite. And, you've got many what would be called high risk countries in, the emerging markets, essentially. And, I believe traditional US dollars is really kind of all the banks that do all the clearing are kind of strangling economies, really. So, the answer, I guess, or one of the answers could be stablecoin. So I think that's how I see it.
Great stuff. And let's get into what you're building, because I've not asked you anything about Orbital yet. But let's get some background as well. You've been in the traditional payments industry before doing what you're doing with Orbital. You spent over 25 years with leadership roles at places like Citi, First Data, and Worldline. So serious players in the market. What was the moment in traditional kind of corporate banking that made you co-found Orbital? Actually, tell us about Orbital as well, because you're bridging traditional systems with digital assets, right? So firstly, what are you doing and what inspired you to do that?
Yeah. I mean, I think my background, I was fairly privileged, really, to have worked for people like, Citi, and we founded commercial cards in Europe as it was kind of an internal startup. I think we burnt through maybe $20 million before it became profitable. But, that was a rounding error for transaction banking within Citi. So I was kind of fortunate to be able to, kind of do this kind of startup thing, inside such a large organization, and, we did incredible things, and we built our product across 20 markets and competed really well with Amex and things like that. I then ran WorldLink for a little while, which is, Citi's cross-border product. I find that a lot more difficult, shall we say, because that was, moving trillions of dollars a year and, massive interest, particularly in like 08, 09, when there was the credit crisis. Transaction banking was such a big thing. And I guess, from a personal standpoint, I found the whole kind of political arena quite difficult. And I had managed to avoid that, I suppose, in my earlier career within Citi. I then ran a JV for First Data and AIB Bank. And, once again, that was a little bit kind of entrepreneurial type stuff as well. So I had kind of an unusual corporate background, but I think as soon as I kind of went more into kind of higher echelons at Worldline and things like that, I found the politics very difficult. And I'll be honest, it wasn't, it was starting Orbital was actually a result of me saying, I don't think I can do this corporate thing anymore, and, and it was pretty late in life. I mean, I was like 49 at the time when we co-founded it. So, but, the inspiration really was that, we were seeing that multi-currency banking was, 8 years ago was not readily available. If you wanted, unless you could bank with JP Morgan or Citi or whatever, you would, and you wanted, euros, pounds, dollars, whatever, you were having to go to multiple banks actually often. So that's very different now. But we really started off in that way, but quickly got onto the stablecoin probably only a year in. So I think we were probably one of the first to start dealing with in stablecoins 7 years ago, I would say.
Yeah. Do you know what, Aaron J, I need to let you ask a question soon, but I want to jump in on the politics point because that's interesting. Was that more of like a kind of personal stressor and something you wanted to avoid, or is it more the fact that it's hard to innovate in that kind of environment?
Yeah, it's hard to innovate. I'm very interested in product. I'm a very product orientated person. I like to build product. I like to talk to customers. I got the benefit of talking to lots of customers in my career. But I think it's a bit of a DNA thing, isn't it? I think some people are just like very, very good in big corporate environments. They have this ability to dance around things, get things done, and through with the right skills. And I don't think I necessarily had the right skills. I was the person that wanted to like just get it done. If I really look back, I probably should have gone in. I probably knew enough in my early 30s to start my own business, but they pay you more and more, don't they? So you stay.
Golden handcuffs, they call it.
Yeah, exactly. Yeah.
Yeah.
So
Actually, one of the things, Chris, is that a lot of your peers, managed to raise significant sums, right? Tens of millions, hundreds of millions.
yeah.
And, you bootstrapped Orbital, especially in the early days before you raised the initial 6 million euro. So how did that discipline and revenue focus shape the company's culture, compared to the whole crypto industry?
Yeah, I mean, I think there's goods and bads with raising money. I mean, obviously, from a founder's standpoint, we still own 90% plus of the business, so that was obviously a benefit. I think I'd been raised in corporate life, really having to work on very, very tight budgets, zero headcount, so you would try and offshore. There was a big thing at Citi around headcount, and it always so you would find other ways of boosting your business. So I think I'm a chartered accountant originally as well, and that kind of helps. So I understand numbers.
Me too.
Uh,
Counting beans is fun.
I escaped. I still love a spreadsheet, I have to say. But I think the bootstrap thing has been a good thing for us, and I think certainly now that AI is coming down the track, we're pretty advanced on AI now, and we're starting to deploy an awful lot of like prototype models to production and things like that. So we've kind of, in some ways, I feel like we've been somewhat fortunate not to have raised, because I think what you can do with say 130 people these days is a lot, yeah. But equally, I think we're not as well known as some of our competitors. We haven't had those kind of marketing dollars, which is just, relates to hard cash, doesn't it? So I would say that has been our disadvantage, that we haven't been out there sufficiently on the marketing side so that everybody kind of knows us. But I think we've made a lot of ground in the last 12 months, and events like this obviously help. And we get lots and lots of really good quality inbound leads now. So I think it's changing. Yeah.
Yeah, and let's look at some of the growth that you've achieved as well. Like partnerships are a good place to start because in the last year alone, you've announced partnerships with Clearbank, SumSub, Stable, and 8cap, if I'm not mistaken. Yeah. How important would you say these partnerships are for the payments industry and achieving the required scale that you need for stablecoins globally, right? Because you do need a lot of people to make this thing work.
Oh yeah. I mean, I think partnerships has to be everything, and I think it always has been. You know, if you could look at partnership as a vendor or uh, uh, a commercial partnership or
Yeah.
whatever. But I think when you look at the number of, we're still a relatively small business, 130 people, but we probably have as many vendors, let's say. So we're into the hundreds of vendors. We have banking partners that are extremely valuable to us, like Clearbank and Banking Circle. Without those, we might talk about interoperability later, but without the interoperability with the fiat world, I think that always has to be there. I don't see stablecoin taking over for sure, not completely, So you've got currency providers, you've got a whole bunch of reg tech providers. I think in general, most of them fall short in terms of what you really need, particularly if you're combining crypto and traditional. So we're doing a lot of our own stuff there. But you've got regulators, you could even say they're partners, but there's a huge amount of partnerships, and if you think you can do it alone, then you're really fooling yourself, because there's so much to do. I see a lot of announcements of partnerships that are saying, two firms are going to bring the stablecoin, to market, and I'm like, well, none of you are regulated, so how are you going to do that? Or so there's
Yeah.
there's an awful lot of BS out there as well at the moment in terms of people announcing partnerships left, right, and centre, but you do need them for sure. But some of them are a little bit misleading, should we say, in terms of what gets out there. Yeah,
Hmm.
It's, I guess, a combination of hype and this fake it till you make it philosophy.
big time. Yeah, big time. And all the big banks know they have to announce something at the moment. And
Mm-mm.
talking to people in big banks, they were doing nothing a year ago, not interested, and now the pressure that they're under
Yeah.
to announce something is absolutely huge. But whether they can actually get it done is another matter, isn't it?
I mean, PayPal World is an example of that. Announced last year, and they were like, "We're gonna have 5 billion endpoints by the end of the year." And I mean,
Yeah,
then that didn't happen, and then the board sacked the CEO. I guess there are probably other reasons as well,
yeah.
but all told, it's showing in the culture like that those cycles are just continuing and going faster and faster.
Yeah, for sure, for sure. And I think execution beats strategy. Eat strategy for lunch. Is that the phrase people use?
There
But
is actually culture eats strategy for breakfast, lunch, and dinner even.
yeah,
So
yeah.
the culture
There
is
you go.
foremost.
There you go, Ranjay.
I like
Yeah,
that. Sorry, but before we started this recording, we were talking about Aaron J's intermittent fasting. So you've just been corrected on lunch from someone who doesn't eat lunch.
yeah. He just doesn't do lunch, yeah, or breakfast.
You're making us all look foolish, Aaron J.
Yeah,
But
unfortunately.
you make a really, really good point around the perceptions, though, and people feeling a need to live up to that. Because I felt this. So last year, I was working at Money 2020 and programming the agenda. And one thing that really stood out to me was Stripe's acquisition of Bridge. Because from that moment on, it seemed like everyone suddenly wanted to talk about stablecoins. Whereas
Yeah.
prior to that point, it felt like people were building, knowing they needed to build, but nobody really wanted to talk about it. And I'm wondering, Chris, have you noticed a kind of real change in sentiment to how people are approaching you, since that kind of moment in early 2025?
Yeah, I mean it's super super helpful for us really, because we'd been struggling to, if you want to sell something, people have to understand it, and the education journey was very slow for the first 6 years, I would say, and it was only the people with really acute payment problems that were starting to use stablecoin. Now it's completely different. Yeah, so the amount of, as I say, inbound leads we get, people wanting to have conversations about partnerships, et cetera, et cetera. And the fact that we've been doing this for so long, and, we've got so many licenses and computer sec sorted out and all of that, makes us kind of like at least an attractive partner to have an initial conversation with for sure, And I think it's changed hugely. And, the next wave of stablecoin adopters, I think will want very different things as well, So, if you're a commodities company or a a marketplace or something like that. I think, there's still a big education piece, I think, to get a lot of traction in most areas, probably, but everyone wants to have a conversation now and they want to understand it. And, a lot of what we do is we produce a lot of material to help people understand it as well. But compliance is a massive thing. But yeah, we should thank Stripe for getting it all kicked off, because I think that was, you're right, Ian, it was a pivotal point, wasn't it?
Yeah, for sure.
And then it was the Genius Act and
Mhm.
Circle's IPO. And
Yeah.
it's like it really all kind of kicked off, and the domino effect is now kind of fully, taken shape. Yeah. And when I first started writing the book in October 24, I was trying to pick a date, in the future, and 2035 seemed too far off. So I picked 2032, and is this really going to happen? Are we going to get to this space? And then this 1 year, so much happened. It just came massively towards the book. And, now I can see, in the next few years, how this is all going to really, like, the pace is so fast now. I would like to understand that from you, Chris, because you're seeing this over a 7-8 year period. What's that curve been? Now you're doing like a run rate of 12 billion a year, right? Like, so how's that curve gone for you?
Yeah, I mean, it's rising significantly, but I would say, I think you have to kind of caution, so like what I was referring to earlier a little bit is, there's a lot of conversation and there is a lot of traction, but the traction's probably, the conversation is certainly outrunning the traction, yeah. So I think, we've talked about people announcing X, Y, and Z, but the process to get, say, another financial institution, and we have conversations or are having conversations with numerous new, the process to get them to, from that conversation to transacting, takes time, yeah. And and I think a lot of what we see in the market at the moment is announcements and things. So, but there's those components that I talked about, whether it's licensing or crypto friendly banks or having all your reg tech kind of set up, and all of that stuff is every single. If you don't have any of those or one of those pillars, you probably can't transact, yeah. And so I think there's a lot of building going on, and there's a lot of announcement, and there is a lot of uptick. We can see in our index. We produce an index. You may have seen it online. But we can see the increase in the circulation. So obviously, Tether is dominating today, but their capital amount isn't changing rapidly, but the circulation is. Yeah, so that's a really good indication to indicate that people are transacting more and more and more. But I think, I still think the explosion in numbers is still to come. I think, as I say, the conversations are happening, but there's a period that needs to happen before everyone starts to execute. And and there's moats, like we consider one of our moats, the multiple licenses that we've got. It took us 2 years in Gibraltar to get our licenses. Now, that was, there was nothing wrong with their application. They were actually very complimentary about it, but it just takes time. So if you want to, there's limited number of people that have all of those components all together. So I think that will hold it back a little bit, but it's going to happen, isn't it? Yeah.
Yeah, absolutely.
Yeah.
Yeah, well, let's look at the the entrance of institutional players to the market as well, because we talked about the Genius Act very briefly, which passed last year. We're seeing Citi, who you worked for, JP Morgan, and more amplifying their stablecoin usage right now. So how do you feel about that? Do you feel like that kind of mainstream adoption validates your early thesis, or is that actually competition, and probably in a way that's maybe not wildly appreciated?
Gosh, I think it depends what they're doing, though. The problem solved for stablecoin today, as far as I'm concerned, is it's an alternative to US dollar banking. I think it's a channel all on its own. I think this I think the stablecoin sandwich thing of, going, say, GBP to stablecoin, selling it in Nigeria or something like that, that's a little bit overblown, I would say. There still needs to be an improvement in regulation and things before the rates come down in certain markets and things like that, So I think, some of that use case is probably, there are great, there are certainly advantages, less friction, more speed, the two go together. But, the pricing thing isn't always better using a stable coin for sure. So, that will kind of work its way out. But, but the problem solved today concerns one end of the leg really being a global south or an emerging market leg. And whether that's just pure stable coin or whether that's a stable coin sandwich, but I suppose what I'm seeing from the banks is what they're doing, is it actually solving a problem for a customer? And there's a lot of intergroup treasury stuff happening on stablecoin, and there's lots of announcements. Multiple banks are going to get together and issue stable coins and things like that. But then it comes back to kind of interoperability. At the moment, from my point of view, Tether is solving most of the problems because that's where all the global liquidity sits. If you want to transact in USDC in many emerging markets, the liquidity just won't be there. So how are you gonna create that liquidity all around the world? Maybe Ubix could be the answer. Tony could have it sorted, but at the moment, I don't see the banks solving a problem, particularly if they're Tether allergic, which kind of most of them are. What do
Yeah.
you think, Ranjay?
Well, it's fascinating. I think if you went back 12 months, would there be just the duopoly of stable coins, Circle and Tether, the same as you had Visa, MasterCard, we still have today?
Yeah.
I mean, there are, of course, other card issuers, card networks, but nowhere near the dominance. Even Amex is tiny.
Mm.
So I think that was still unclear. But I think with the Genius Act, it just kind of opened the floodgates to several stablecoin issuers. So I think Tony and Ubix and others he will be challenged by other clearing houses will emerge and will be relevant. But the long tail that you mentioned, Chris, especially in those some of those markets where the liquidity is low, is still going to be a challenge. And so I think to that, Tether has a phenomenal network kind of advantage, right? Because networks are hard to break. And
Yeah.
when you've got that, that's a great flywheel. Yeah, I mean, we still see how exactly that all shakes out. Then they're in a great position.
Yeah, I mean, we've seen for years that it's very hard once people get embedded in a certain payment method. We see it on the domestic side all the time. It's like, why does everyone use Ideal online in the Netherlands, and then in the UK everyone's using Apple Pay, and people do migrate towards certain payment methods. So dislodging Tether will be a challenge, I would say, unless if you can't create that liquidity, then why would Citi or JP Morgan's issued coin take off in preference necessarily? So it's I always say with any kind of business case or any kind of business itself, what's the catalyst, what's the factor that will really make something explode and happen? And it's hard to see that at the moment, to be honest, for
I
me.
agree. I wouldn't write them off though, So
Oh, no.
yeah, they have their distribution, they have their brand, they have their networks, very established. And even if they don't cover the same number of countries in the way Tether does, it wouldn't take them long to, kind of cross Tether's total, kind of the transactions process. Like they can just do it in the US alone. Like their
Yeah, they can
size
do
is
it.
so huge.
Yeah, they can do it at a flick of a switch, actually.
Yeah.
But it just depends on whether whether the problem's solved. It depends what problem they're solving. If they're just doing global treasury, if they want to add up all those numbers, then yeah, it's probably going to exceed whatever circulation's going on with USDC or Tether. But I think what everyone's really interested in is the problem that actually gets solved, as opposed to, is it just replacing some internal banking
Yeah.
transaction, something like that.
And actually, Chris, that brings me nicely to what I wanted to pick up on. You mentioned the index. And what's interesting, I mean, you've done this with Artemis and Sensor Tower as
Mm.
data partners, right? So what I found interesting is by filtering out the high frequency trading, right? Just focus on the customer payments under 10,000. We just talked about, like, if Citi wanted to make those numbers go up, they can flick that switch. But
What the
that,
real numbers?
yeah,
Yeah.
exactly. From this work that you've done, like, what's the most surprising trend? What have you uncovered? What are some of the real world stablecoin uses?
Yeah, I think what we've seen is, we obviously see big concentrations of usage of certain coins in certain markets. Yeah. So, Circle's definitely dominating North America. Tether tends to dominate most of the rest of the world. We've seen a very slow, in my view, transition from Tron to some of the cheaper blockchains, even for low ATV transactions, so low transaction sizes. Tron's got really, really expensive, and there's been a big shift to Binance Smart Chain, and there's others that are even cheaper, but we've not seen that kind of shifts. People that own stable coins, they even have their favorite blockchains, and it's kind of hard to get them off they'll continue to pay $4 or $5 a transaction. I think it's a bit less now, rather than a cent a transaction on Binance Smart Chain or Polygon or something like that. So, it's, but it's shifted. It has shifted away from Tron, and it is shifting away from Tron really, really, really quickly now, because others are faster and cheaper. So, some of those things have been fairly interesting as well. And, we also monitor premiums. So premiums are, if you're going to buy, say, Nigerian Naira USDT locally versus buying US dollars, you will generally pay a premium to buy the digital dollar versus the traditional dollar. So we monitor that all the time in terms of what those rates are. And there's some surprising, to be honest, we don't actually understand why, but some of the premiums can be very, very different. And some of it's driven by the fact that regulations unclear, or I mean, certainly if it's a really grey market, then there'll be a huge premium to buy versus not. And then you get into things like currency controls and things like that, So obviously there's an advantage with a stable coin, because it's the leaky bucket against monetary policy and currency control, isn't it? So a lot of the premiums that we're seeing, we can't always explain, but there are definitely mostly significant premiums in emerging markets to buy stablecoin, which of course is driven by supply and demand, and probably driven by, lack of clarity of regulation. And, so I think that the way things will go is, the emerging markets will have to work out how they're going to deal with stablecoin and still control their currency, if that's what they need to do. And I don't think it's an easy conundrum to work out. But if that happens, then I think we'll see, like we've done in Europe, the exchange markets will pretty much track the fiat markets, and you won't see all these premiums. Then it will become very, very easy to transfer via stablecoin at the absolute best rate every time. So there's loads of things happening there. But I think that's the thing that really interests me. It's like this relationship between monetary policy, stablecoin premiums, and then obviously then that impacts the price.
So, Ian, I just want to jump in here because, Chris, you're absolutely on fire here. And this is such a hot topic. I just flew back from Kigali in Rwanda, where I was at the Inclusive FinTech Forum. And it was being hotly debated because in Africa, this is a big issue.
Yeah.
And so some of the conversations that I was having, and I was thinking about, why can't the central bank implement pretty much the same model that they currently have for, as you're calling it, traditional dollars, fiat? And with the vast kind of regulation, if they were to say, okay, the only thing, you have to be regulated and you have to buy the local currency from us, and give us your stable coins in return. So a central bank will end up with an account with Tether, effectively.
Mm.
I'm seeing that potentially that could actually give them more control.
I think you're right. Yeah. I hadn't thought of it in that way before, but yeah, absolutely. But yeah, potentially. I mean, I had a conversation with a very large African country, a representative of the government, and this is probably only about 18 months ago. And, they were talking about CDBCs and, they were saying, well, could you be a way of, connecting our CDBC with the rest of the world? And it was interesting because I hadn't even thought. I said, well, everyone will just automatically migrate to a digital dollar. Then, if you're going to create some sort of exchange mechanism with your own currency, then you'll lose control of your currency. Basically, they hadn't at the time. Penny hadn't really dropped on that side, which I found quite staggering. I don't know, I'm not sure I have a really good knowledge though of like economic policy and why currency control is so important though. But, there's economies in Africa, for example, that, I'm like, well, why wouldn't you just switch, because it's a stable currency, people can transact with you cross border or whatever. Why do you even need your own currency? Well, that's very, don't know. Yeah.
That's an interesting point to drop. I agree with Aaron J that you're saying some absolutely fascinating stuff. I've got a slightly more tangential question to ask, which is to go back when you were saying that people seem almost wedded to using a particular blockchain, regardless of the cost of transactions, which I find kind of strange. As you were saying, it might be hard to know exactly why that is, but my assumption is that's possibly just user familiarity and possibly a bit of laziness. Would that be right, or is there something I'm missing?
Correct. I think that's been a theme in payments the world over, since the beginning of time. It's like people get used to using one thing and it takes them time to wake up to something that's, better. It's like, even Apple Pay and things. I mean, I've been an Apple Pay user for eons, but so many people and my friends just weren't using it and they're still getting their plastic card out. And so I just think it's that really, but it is moving away from Tron now and everyone's waking up to it. And these things happen like a snowball, don't they? So we were like, why? So we're recommending to all of our customers, look, you need to be supporting these cheaper blockchains because all of the traffic's going to move. And then, 6 months later, it still hasn't moved, but now it has. So, it will happen eventually.
Yeah. Well, let's shift this on to a slightly different topic. I want to go into enterprise adoption of stable coins or digital money generally, I guess we could say. So for a traditional kind of enterprise CFO who's skeptical of digital assets, and there'll be probably a few of them out there, what's your elevator pitch for basically why they should integrate stable coins into their existing payment flows, be they B2B or?
Yeah, I mean, I think it's an easy one, really. I think we would be, and many others would be highly regulated. So when you look at, the regulations for VASPs and things, if anything, it's more difficult than being an EMI or a bank. So there's a lot of security there. If they don't want to hold stablecoin at all, then, there's structures where you might be able to accept stablecoin and auto convert it to fiat and, provide. So they don't need to have, say, stablecoin even on their balance sheet. If that's a step, I think everyone needs to do things in kind of baby steps, don't they? But, if that was something they wanted to do, then the organizations like ourselves could support that. So, because obviously then if they're holding stablecoin, there's implications for audit, they might be regulated. And, there could be a whole bunch of stuff that they might then have to recognize. There's structures around that. But I think the other thing is just understand the compliance side. We spend a lot of time educating people on compliance and how we keep them safe. And I think, the majority of compliance officers around the globe probably still don't understand it. And to be honest, the crypto industry is still working it out. So I think, that tends to be the biggest hurdle is, how you make them feel safe,
Yeah.
I
And
stand.
do you know what, if I can be challenging, saying the crypto industry is still working that out is not going to make them feel safe.
No, it's not. No, but I think they're still working it out in terms of like the nuances around travel rule and,
Yeah.
what's coming through the network and what isn't, what should be matching off and those sorts of things. But I think the fundamentals of anti-money laundering are safe. It's intact. All the fundamentals are the same. And I think that's what people don't understand sometimes, it's just like if you apply the fundamentals of anti-money laundering regs and things, it is no different in the crypto industry. It's managed slightly differently. And if anything, my argument is visibility down the blockchain is super, super powerful. So, if you know where those funds have come from, you might be able to say to me, Ian, well, actually, yeah, I own these two wallets, yeah, but we could probably run a set of analytics and say, actually, Ian, we know you own these other three as well, So,
Yeah.
because the transaction patterns will show that you very likely own these other three. So, there's such a lot of data out there that will, and, a lot of our strategy is to mine a huge amount of data so that we know enough algorithms and things and AI tools and things to put a lot more surety around things like transaction monitoring and those sorts of things. So, transaction monitoring can be taken to a whole new level with blockchain and crypto, in my view. It could be, it's a shame. I'd really like to see some standards, I suppose. There's some really capable blockchains like Avalanche and things that can take a lot of data with it. But kind of what's happening in the industry at the moment, when I say it's not really been worked out, is that, you've got these centralized repositories, Nota Bene or someone like that might be receiving a whole load of, data. But really what you want to do is pass this data up and down the blockchain. Yeah. So
Yeah.
but then you've got this issue that everyone can see it, data protection and that type of thing. So there's a few things. That's what I mean when there's things to work out. But I think the fundamentals of safety are absolutely there, 100%.
Yeah, I think that's a really, really interesting way of answering that question and a really good way of answering that question. I think a lot of the time there's this fear that what's being built is completely different to what existed in the past. And in a way, they're kind of more, I guess you could say they're more like parallel rails rather than being entirely different. I don't know if that's quite right, but do you know what I mean?
No. Yeah.
Whereas people are quite scared by the idea of something new. I mean, are there any other misconceptions you would flag? I realize you've possibly pulled out the biggest one there already.
I don't think so, Ian. Can't think of anything else really, but
Yeah.
yeah, it's just education for me.
Yeah.
Like the education piece is big, and I'm still learning every day. And crypto industry is very nerdy as well. It has three different names for every blockchain, and it's turned into this kind of. There's a lot of kind of intellectualizing, isn't there? That's so that doesn't really. I think the industry doesn't really help themselves sometimes by calling, Binance Smart Chain BNB and BEP20, and it's got all
Yeah.
these different names, and it's almost confusing by design because
Yeah.
there seems to be a lot of intellectualizing about it. Yeah. So those are some of the things I don't welcome. It's just like simplify these things, guys, so that everyone understands, and so it can be mesmerizing, and I still find some of it confusing. So
So actually,
Yeah.
Chris, on that, and it's a bit of a sidebar, but about 18 months ago, I was working on a project with Soda and MIT to try and sort of interoperability. But we said, like, let's start with, defining the terms, because each of the terms also mean different things. And at one point, we got into, well, tokenization with a Z versus an S. If you Google it, you get different results.
yeah, yeah, yeah.
So it was not even like the names. It's also just the language that's. But I wanted to jump back into this, the thing of AML and and compliance and all of that. As one of the core themes in the book, I explore this idea of we can get this fully automated. When I say fully, I say 80%, like where all of we still have the human judgment, human in the loop somewhere and something for that 20%. But for the 80% is like fully automated, AI driven regulatory compliance.
Mm.
Given your deep background in traditional payments, and how do you see AI transforming the way cross-border risk and AML are handled by the end of this decade?
Oh, wow. Yeah. I mean, fundamentally, I would say, and I think that's the challenge for the big banks, isn't it? And it's like, and I think most of the reg tech platforms I'm very like unimpressed by, I would say. sorry guys, of all you guys and that have invested hundreds of millions in them. But I think the banks, like, and this is one of the reasons for the problem in stablecoin in the first place, isn't it? Is the banks they just can't handle the dynamics of of transactions. And so it's much easier to say, look, we're not going to send anything here, we're not going to send anything there, those industries are out. You know what I mean? And there's so many nuances in the world now, and the way that business models change and things like that. I mean, how do you handle it unless you handle it in a much more sophisticated way? So for example, some of the things that we're doing is we're mining plausible counterparties for industries. Now that might sound, I mean, it's really obvious, yeah. So if a trading platform, like eToro or something like that, yeah, there's going to be certain counterparties that you would normally pay, yeah. You might pay affiliates, you might pay for your platforms or whatever. But if you're starting to pay charities, or you're starting to pay, other forms of then we just started mining on AI all the plausible counterparties and checking them through, and it was just like spot on. I mean, the industries that we really had a deep understanding of, and then you check it all around. Or, you can't rely on AI, but the amount of work that it can do for you to mine data is radical. So that's just one example of some of the things that we've been doing. But I personally believe that the the comfort in who you're doing business with and who they're, who those businesses are doing business with will come from, an awful lot of AI mined data and really sophisticated ways of tracking those transactions and knowing whether you've got real risk or not. And I think the majority of banks today are just getting it wrong every day. And that hurts commerce too.
Yeah, that's a big point. And I'm going to have to finish up with one last question, which is more focused on you than the ecosystem. Well, actually, it's focused on both. If Orbital achieves its ultimate mission, what does the cross-border landscape, payment landscape look like in 5 or 10 years? Does the concept of exotic currencies still exist, or are stablecoins kind of going to entirely level the global playing field?
Gosh, Ian, it's a difficult question.
And I know you've got about 5 minutes to answer it at most.
I have generally I have like a 2-week look ahead at the moment with everything that's going on. I think what's going to happen is I do think that all of these governments around the world are going to have to follow the US and Europe and regulate properly. Yeah. I think for me, that's the first barrier to this, really, like for stablecoin to kind of emerge out of any gray areas. Yeah. So I think assuming that's going to happen, then I personally think that we could see that, stablecoin could become the de facto way of transferring funds. I mean, obviously Swift's not going to make it, is it? I can't see the structure of Swift and how it's, ownership structure, DNA. I can't see Swift going 24/7 real time. I just can't see it happening. So what is the alternative? And I think that's why everyone's so excited about stablecoin, is like, but I think a lot of it will depend on, regulation and, making sure then the foreign exchange markets will start to mirror the fiat markets. I think you'll get a lot more transparency in terms of, the exit and entry points into all these emerging markets, hugely expensive. Yeah. People sitting on funds for days and days in the traditional space, If you want to boost your P&L, let's just sit on those. Let's not clear those transactions for another 5 days. And it's definitely happening. Yeah. So, it does seem like the answer to me. But I think, for it to become like the answer and the only answer, I think, regulation needs to change. I think that it would be very, very helpful to have some sort of world standard in terms of, data passed across the blockchain and that type of thing. I think it could be hugely beneficial for things like commodities that are moving around a lot, and you got, quantity and quality reports and things like that. So you could put so much data across the blockchain, which Swift, to be fair, does hold to today, but there still seems to be lots of parallel side systems and all of that. So, who knows what the answer is, Ian? But I think there's certain things that are going to happen, and then maybe stablecoin will become the only way that people use for cross-border payments. But I think at the end of the day, though, I certainly see this parallel world of US dollars, the digital dollar, just like sitting out there on its own, and there's not always a need for that conversion to fiat on either end. And I think that's going to happen, is already happening a lot in emerging markets, because the desire to own a stable coin versus local currency or even US dollars inside the market is so much greater. So it remains to be seen. So we may just see a lot of just parallel digital dollar transactions without the need
fascinating
for the
stuff.
fiat thing. Yeah.
You've opened so many doors to other conversations we could have had. We may have to bring you on again at some point, Chris. Aaron J, any final words?
Well, I mean, Chris, you totally smashed it. That was, fascinating and interesting in so many ways. And yeah, we, like Ian was saying, we could really take this conversation so much more. We're just out of time. But thank you so much. Such deep insights. Really enjoyed the conversation.
Yeah. It's been a pleasure. It makes me think I need to go and, study more kind of macroeconomics, like I did at college, because a lot of it relates to that. Yeah.
Yeah. So that was a great podcast following your absolutely pessimistic intro, Chris. I thought it went pretty well. Really enjoyed chatting with you. For everyone that's been listening in, thank you very much for joining us. This has been the Future of Finance is Open podcast. I've been Ian Horn. I've been joined by Aaron J. Katakam and Chris Mason.
Thank you, Ian. Bye-bye.